earlier in the show, House Republicans unveiled their much anticipated tax overhaul plan today, and it could have sweeping effects on Californians. Here to talk more about the impact on taxpayers, here is financial advisor Laurie Itkin. Thanks for being here.
Happy to be here, Kathleen.
Well, in any kind of tax reform, no matter how politicians try to spin it, there are always winners and losers. So lay out for us, in your opinion, who the winners are and the losers are in this tax plan.
Well, Kathleen, in California, we are the big losers here. And before we get into the details of the plan, I want to simplify this for viewers. Whenever you hear anyone reducing or eliminating a tax deduction, what that means is that that's a tax increase to you.
And so let's bring it right to our doorstep now and get into the particulars in San Diego, because this one struck me. We already have a housing crisis here. It's virtually unaffordable, and couldn't, like you're saying, putting an end or a limit to the mortgage interest deductions for one and property tax deductions make it that much worse.
That's right. So what they're doing right now in this House Republican proposal is saying that if you have a mortgage that's over $500,000, your ability to deduct mortgage interest stops right there. That you can't deduct if your home or your mortgage is worth more. That's too bad. It stops right there. And property tax is being capped at $10,000. So if you're a renter, this doesn't hit you directly, but for people trying to get a home here in San Diego, it's a big deal. And this will not apply to existing homeowners, but people who are going to be buying homes in the future. This could depress the prices of high-end homes.
And construction building companies are none too happy about that aspect of it either.
That's right.
And Laurie, more of the ways that Californians also try to minimize what they owe seem to be going away, like a loss of tax credits for college loans and adoption, and tax credits for people going through divorces. Walk us through some of these changes that could impact our bottom line.
Well, the big one that everyone's been talking about, and it's huge, is we will no longer be able to deduct our state income taxes. We in California live in a very high tax state. Our income tax rate is one of the highest in the country. And so let me just give you an example. If you're a household, you're earning $120,000, and let's say you have to pay $10,000 worth of California state income tax. Under the present situation, we would take that $10,000 off the table, and federal tax would only apply to $110,000. But under this proposal, you're going to not only have to pay the state tax, you're going to have to pay federal tax on the entire income. This is going to cost middle class and upper middle class Californians thousands of dollars a year on average.
And the corporate tax rate would be slashed immediately and permanently under this, and Republicans claim it'll all come back to us in the form of growth and jobs in the economy. But when you're talking about the cost that you were just mentioning to taxpayers, does this really trickle down to the middle class in a tangible way?
Well, you should really be interviewing Ronald Reagan to answer that one. I don't believe it really will. I mean, the question is, is this huge tax break that corporations getting, is this going to trickle down? Are they going to start paying workers really higher wages, higher salaries? I don't know. We'll have to see. The one provision you mentioned that I really do want to focus on is divorce is already financially devastating in this state, and this proposal is going to make it even worse, because today the higher income earner, maybe the husband in many cases, pays child support and potentially spousal support to the ex-wife. And currently, spousal support can be deducted. So let's say a husband is paying $4,000 a month to his ex-wife. It really only feels like maybe $2,500 or $3,000 a month. But this tax deduction is going to go away, which means that there's going to be less money after tax to pay for spousal support. It could impact child support, and it's taking money that's being exchanged between ex-spouses and going to the government. It is really going to be financially devastating for people getting a divorce in this state.
Well, Laurie Itkin, you gave us a lot of reasons for Californians to pay attention to this tax plan as it's rolled out, and also get in touch with their Congress people if they have questions or concerns. Thank you so much for chiming in tonight.
Thank you.